Back in 2014, Barwon kicked off a research project to look into alternative real estate markets. We were looking for markets that offered good value, but importantly, markets that were going to have space demand driven by strong demographics. And with that focus, with that kind of guideline, it wasn't long before healthcare property was on our radar. The healthcare property sector is appealing to us because it offers not just defensive attributes, because we all get sick, we all need to be dealt with in terms of our healthcare needs, but importantly it's also a growth sector. It's a growth sector because of demographics, the ageing of the Australian population, but also because of technology advancements in the healthcare sector, such as scanning and medicines and surgery. And finally, just because of community expectations. We all want to get well, we want to live healthy lives, and we all have high expectations of our healthcare services. So the Barwon healthcare team has been growing since 2014. We now have 11 staff focused on healthcare strategies. We've got 50 assets across Australia, ranging from medical centres right through to high acuity hospitals. A big focus on mental health, medical centres, pathology, all part of that mix of assets. The healthcare property sector, we think, is an important sector for our investment strategies. It offers us a nice mix of yield and growth, but importantly, it's an important diversifier with lower volatility compared to other traditional sectors of the property market.
Investing in healthcare property gives investors exposure to the defensive and growth attributes of the broader healthcare economy in the form of traditional real estate type returns. So we see good steady income streams and stable steady capital growth. The performance of healthcare real estate demonstrates non-cyclical, defensive and growth characteristics, particularly relative to some of the other traditional commercial property sectors. And that's supported by long-term demographic tailwinds, the fact that health expenditure is largely a mandatory and not discretionary spend, and that the economics of the sector are supported by Australian, state and Commonwealth governments. The portfolio is well positioned going into that difficult period with very long-term lease arrangements to top-tier healthcare organisations that are well capitalised. We managed to accrue 97% of our expected income during the COVID period, and that compares very favourably to traditional commercial property sectors and really does demonstrate the healthcare real estate's resilience in times of market turbulence. Our valuations have held up very well, with our external valuers holding our asset values steady, and in some cases we've seen modest increases in valuations during the COVID period. Healthcare property's ability to navigate these difficult periods, it really is one of the key components of our investment thesis and has been proven true during both COVID and the GFC periods. We invest in primary, secondary and tertiary healthcare properties Australia-wide. Our existing portfolio is constructed of hospitals, both psychiatric and surgical, medical centres, day surgeries, cancer centres, imaging clinics, pathology laboratories and a range of other facilities that are really critical pieces of Australia's healthcare infrastructure. We also like to look for assets and opportunities within our portfolio where we can be active with regard to our ESG commitments. We've been very fortunate to have the ability to make investments that not only generate attractive risk-adjusted returns, but can also have meaningful social and environmental outcomes.